Good evening, everyone. This is Chrissy from Solstice ATR. I hope everybody's doing great on Saturday night. This video will be covering from Sunday through Friday the following week, the overall market. There are some numerous signals which I would consider yellow to red flags that are on the charts. Before I do, you can check us out on Solstice, Twitter, Instagram. We use technical trading and adaptive algorithm for us to be able to trade. You can subscribe for free, but remember, this is for illustration use only. We're not a broker-dealer. Past performance doesn't indicate future results. So the signals I was talking about has to do with the distribution and the signs that are basically showing us that there is a little bit of weakness and there are institutions selling some of their positions. Volume and the breadth of the market have been a little bit on the rare side, on the negative side. The VIX since the 1990s has been around, but 1995 and 1996 when the VIX spikes, usually it's around the $22 range. This week, we were above the $25 and the $30 range. So we have to take a look at that. Second of all, as well, we had the Omicron virus, which is unknown. Is it curable, not curable? It's a different strain similar to COVID-19. And we have as well the federal policy, which have been changing. Is there inflation and cost of things going higher? So we have to pay attention to that outside things that happened this week. As well, we had an outside day look above in the overnight. We came in the range for 2 days range, and we basically sold into the before the close. In last 30 minutes, they tried to rally it back up into the close, the Fortune 500, the Dow, the S&P, and the Russell. So is the market conditions telling us we have to pay attention to the signals, and we don't have to be biased to either side, but understand what is risk in relationship to where we are today. Let's first break it down step by step. I'm going to scroll down one more slide. Trading is set up based on signals. We can trade futures, forex, equities, ETFs, options, and bonds, as well as crypto, as well as Bitcoin. But the most important thing, we don't end up buying at the wrong time. Timing is not always there. People do dollar cost average. A short-term account is different than a long-term account or a mid-term. So you have to differentiate the differences between those accounts in order if you are a swing trader or a day trader. So by us looking at that, we have an open mind, and the maximum drawdown for this week can happen, but does not have to. So what I did, we took the VIX, we took the S&P from the 1995, 1990s, 2000, 2008, as well as the 2020, and we differentiated the S&P every time the VIX was above the 22, and the S&P got that drawdown. So the maximum drawdown, as you can see, I have a number here of 28%. We have a secondary one, which is around 18%, and an average for the high and low between all these conditions that were met is around 4,000, 4,100, and the minimum is between 6 to 7%. We are still right on the simple moving average 50 SMA on the weekly chart for the S&P 500. Does this mean that the daily chart can hold the 50, or do we end up losing the channel that we have, or we go back visit the October lows, the July, June, as well as the March? But we have to be open mind to things. If they are, the conditions have to change, or do we continue higher? Let's take a look at one more slide. These are the numerous signals that I was talking about. Here are the numbers by taking a look at the S&P drawdown when the VIX was in 1990 through 2000, 2021. The 1990 where we are in relationship to the S&P, it had a 14% drawdown. It took it 66 days in order for it to recover. In 2015, similar situation, took it about 3.4%. In 2018, took it about 2.5%, and the drawdown was only very short term, very short lived. The other one was 171 days. The 2020, when COVID hit in February 19th through March 23rd, there was panic on the street, and we had a drawdown of about 25%. So if I average those four numbers, the average is about 11%, and the median is about 8%. So if we take a look at the high of the S&P 500, we use the SPY here, which we can go back to the prior slide. We can see that the drawdown from 4,700, we can get a 3,800, a 4,300, 4,360, 4,400, and 3,380 or 3,390. We can see the differences between the 6%, the 7%, the 17%, and the 27%, and the average where it was before. So this is why I used those numbers here, and I highlighted them on the chart for you to pay attention where are the minimum, average, and the maximum drawdowns. So pay attention to what the charts offer you as a trader. Do not be biased to either side. Here is the scenario on the VIX. So we have to pay attention to the VIX, because the /VX, the futures, wasn't around long enough, or if you use the UVXY or the VXX, has not been around since the 1990s. This shows you the drawdowns, which are in the first week to the first 3 months. It looks very ugly in 6 weeks downtrend in relationship to the 9 month, 1 year, and 2 year reversal back up. If we take this into consideration, the drawdowns in relationship to the long-term investment, we've had that big spike in February on the VIX till March 23rd. Then we had lower highs, as you can see, coming in. But eventually we tried to round off and tried to clear that $25 range. And eventually we broke 28, came back in. We have a professional gap here on the weekly chart. On the daily chart, it's visible. This is a weekly chart. You can see it's a 3-year weekly. But I wanted to show where the annual high and low for prior year, because I used those fib as a reference point. We know the 61 will act like a 38 and the 50 if we're going to continue higher, or do we fall back in range of the $25? So we have to be very cautious about where we are. Those purple lines is what is called the expected measured move on a monthly chart using volume profile in relationship to time. And these are the extensions to the upside. I know I have a minus 61 is similar to 161. You have a 78 and a 200% up the top in relationship to the monthly chart from last month, the measured move. So let's talk about a little bit outside this subject about, people have asked me a lot of times, can you please give us the difference between a retirement account, non-retirement account, taxable account, non-taxable account? So what I did a small little slide, which is a little bit talks about the overall markets and how we can use different instruments to set up your goals. Remember, these are just examples. Whether you are a trader or a swing trader, you work for a company or you don't, usually you have income, correct? So you have to save some of that income to pay your expenses, pay your rent, pay your mortgage and your car payments or whatever you have, or credit cards or your school loans. And at the same time, you need to save for your retirement. But the retirement account, there's different ones similar to IRA, qualified account, Roth IRAs, and taxable accounts that are taxable on an annual basis, and some of them are tax deferred for your retirement. This is just for example to give you a better idea what you look for. How do you visualize your future or your goal? Each person has different ideas and different concepts that they have to go by. So each person's goal is different. One person can save $100, another person can save maybe $2,000 a month. So it depends on your goal and what you want to accomplish. You have to build a picture that fits your frame and your time horizon in order for your retirement. and how can you use different instruments to minimize or maximize your tax credits so that way you can have your financial freedom, whether you invest in securities, bonds, real estate, or into your own business and get tax credits. So there's a couple of different buckets that the Internal Revenue Service uses. One of them is the pension plans, which are tax deferred, but they are considered regular income on distribution when you turn 60 or 65 or 67 when you retire. Some of the real estate or mutual funds or stocks, if you leave them more than 30 days, they are considered, or year, 2 year time frame. In real estate, they are considered long-term capital gain. And this is why they are taxed on a different tax bracket. As well, there are life insurance policies similar to a Roth IRA, but the Roth IRA is on a tax no credit, but you are already paid your taxes on your pocket. So you contribute to that Roth IRA. It's going to be tax deferred, but when it comes out, it's similar to tax-free distribution, or what we call a loan provision, or taking money as distribution from your municipality as your Roth, as well as benefit if it is part of your revocable trust or family estate. The death benefit is considered outside your estate, which is tax-free, as well as the life insurance. But if you own it in your own personal name, it would be part of your estate and it would be taxable. Here are the different options where you can put the assets. You can take a snapshot of it. You can, slow it down, pause the video, understand what they are. You have questions, you can ask a lot more later on. These are the differences between, having money in your retirement account, qualified account, a Roth IRA. Where are the events that are taxable, non-taxable, the limitations on them, or what you can use and what you cannot use. And here's some examples of what are the advantages and disadvantages. You can take a snapshot of it, stop the video, take a look at it, and if you have questions, you can ask. Last, remember, you need to set up your goal according to your needs. You can reach out to us to give you an example what you can do by going to your own broker or going to your insurance advisor in order to help you out, okay? Last but not least, we have to understand the overall markets. And I would just want to say, remember, whatever you do in your retirement, whether you trade ETFs, equities, Forex, futures, options or bonds or Bitcoin or crypto, trade according to your risk and understand what you are willing to lose and gain by taking money off the table when you have some gains on the side in case the market does turn south. Let's first of all minimize this slide, and what we want to do is go to the S&P 500. We can see that we are still on that 9-month range. This was the low in October before the November rally. We had the rally, and this is the December. We have a reset. We are just sitting on the 50 simple moving average above the linear regression channel going up in the cone. Do we open up and end up losing and coming to the 200 SMA? We do have this gap here. We do have this gap here. We have to pay attention to what the charts offer us without being biased to either side. This is the S&P. It looks a little bit weak, but if it does hold and ends up reversing for the Christmas holiday, don't be biased to one side. I know it shows you on the short time frame daily chart, it's still short and bearish, okay? So let's take a look at now the NASDAQ 100 dollar sign NDX. We can, NDX, my fault. The NASDAQ 100, we can see it looked above that linear regression channel, fell back in, looked up, created an annual high. Eventually, the NASDAQ fell a little bit lower, tapped into the 50 simple moving average and bounced back up on Friday. Does this mean it's going to hold this area in order to continue higher, or does it fall back in the range of the prior month high, which we retested here, retested and continued high? This is the dump reversal consolidation for 2 days, and eventually the fourth day broke out. Reset where we broke out from, looked above and fell back down. Is this considered a head and shoulder? Possibly, but trade what the charts offer you. Remember, this is your 50, this is your 116 simple moving average, and that's your 200. We have not retested the October, November lows, okay? Let's go now to the small cap, which looks a little bit more weaker. Then let's use the RUT. RUT, if we look at since January of beginning of the year till now, this is the first time after the March high, we looked above, we eventually fell very hard inside the annual range in the small cap. Small cap is the canary in the coal mine that first starts to move up and starts to move down. This year it's been range bound, haven't been able to break out of its own way, has been acting a little bit on the side range. Does that mean it's going to look up and fail and bring everybody down because there is fear in the market because of the federal policy or the variant Omicron virus? That can it be cured, cannot be cured? Is there going to be a vaccine for it? Is it going to be effective or not? And we have to pay attention to what's out there in the overall market, in the international as well as the domestic. Let's take a look at the DJI, which is the Dow Jones Industrial Average. Oops. DJI. Why is it doing okay? $DJI. Okay. Here we go. We can see that the Dow Jones Industrial Average eventually broke up. We fell down. We have this professional gap. We filled this gap here. And we filled this small area here. We're looking back up. It had an inside day, but it's holding the 200 SMA. We are away from the 116 and the 50 simple moving average. This is very important. We are holding this channel up. Pay attention to it. Pay attention to the 200 SMA if it's going to create a head and shoulder or fall right through. But remember, we are in an uptrend still on the long time weekly charts. Let's take a look at BTC. And I will go to gold and silver. This is Bitcoin. We can see that we have this gap here. We do have these two gaps here, and we do have this gap here. We eventually fill this gap. It's no longer valid. I should take that gray area out, remove the drawing, but I usually leave the letter gap if it is filled. But usually if it is not filled, I'll leave the gray area there that shows you where the gaps are. We created almost like a double top. It looked above, eventually failed, couldn't hold. We broke this channel down, which is no longer valid. I have to remove it, remove drawing. The machine has this sharper channel, but we are in a linear regression down channel, have not been able to take the 60,000 out. We looked below. We tested the prior advanced decline line where we broke out of here, which is the 52,000 area. Does this mean Bitcoin has to hold this area? Possibly. It retested that 89 EMA, bounced down and closed right on it. Does this mean it's going to come back and test the 200 or the 116 backside of the channel? It is possible, but pay attention to what the charts offer you in case Bitcoin reverses back up. Let's take a look at Ethereum. Ethereum basically is an uptrend. You can put a linear regression up channel on it from a long time frame from here. We take this area here to this one. We are still holding this uptrend. We tested the 50 simple moving average on the daily chart. You can see it looked up. That's the shoulder. That's the head of it. If this is considered a shoulder because it tried to look above, you see I had these two linear regression channel. It fell through them. No longer valid. We have to remove them. Remove drawing. Oops. I extended it to the right. Remove drawing. We're going to remove this one as well. We can see that this high, but in this actually linear regression channel no longer valid as well. Remove drawing. We do have this major one, and we have this high here. So we have to pay attention to this symmetrical triangle in case Ethereum cannot hold the 50 SMA. If it clears back the 18 simple moving average in the annual high for the year, if I put my mouse there, you can see where the high was from February 25th, 2021 till 5/13/21 when it got introduced Ethereum to the platform that says the future Ethereum but we have filled this gap. We have these two professional gaps down here on the 4-hour chart. These were revisited and filled, no longer valid. So pay attention to what the charts offer you. Let's take a look at now GC. GC was in a linear regression down channel in a symmetrical triangle with an uptrend. It eventually broke up, but eventually failed the long time frame. If you look at it, this is from 6/3/2021 from 8/6/2020. So it came further down. It eventually broke up, tried to look above the 1850, 1880, and fell back in the range. We have to hold this up channel trend here in order to keep us up. This is the secondary line that we have on the weekly chart. If I go to 3-year weekly, I just want everyone to know where it's coming from, so that way nobody says anything. We have the uptrend. We are in a linear regression down channel. This channel is very important to me because it looked to it. If this is going to hold, this was from prior here, and it looked up and eventually fell back in it. Does this mean we're going to stay inside the range of that linear regression? This looks like a look above and failure coming back in that linear regression down channel on the weekly chart. But pay attention, if there's fear in the market, do they turn back to the gold in the futures for safe haven as a trading platform for them to secure their assets similar to Bitcoin? But I am not saying that, because on Friday it kind of got a nice reversal. That engulfing candle was basically taken out on Friday back to the upside. Does this mean it consolidates and eventually breaks up this channel that it is up there that's holding, that fell down? Is it going to go back up to clear this one to continue high? So that's GC. Let's take a look at crude oil. Crude oil, this is the annual high from last year, from January 8th, 2020 till the April low. Eventually, we looked above it. We tested it a couple of times in March, April. Then we tested it in August. Then we looked up and eventually fell back in range. But there was a small gap in here at the $65 has been filled. You can see I had this marker here. It eventually filled it, which is no longer valid. I have to get rid of that box, remove drawing. And we are right now sitting at the $66 range. Does this mean crude oil is going to find some kind of a safe haven to clear the 200 SMA and going back inside that linear regression where the consolidated, where it created that rounded bottom or the head and shoulder and eventually broke up? Or does it continue back to the backside of the $57? Because I consider this is 1, this is 2, this is 3. If this is the wick and it's going to hold this area, and these 3 are considered to be support, and it can clear the $69.40 area, is it back off to the races in crude oil? Let's go right now, take a look at AAPL. You can see AAPL retraced a little bit. This is my weekly fib from last week. This is no longer valid. We have to remove it. We only have the expected measured move. On the monthly from November, you can see it looked at the 61.8 and eventually fell down into it. Let's see if it's going to hold the 159 area. Let's take a look at Amazon. Amazon, this is the annual high from last year in September, has not been able to clear it. It looked at a couple of times into it, fell back in. Eventually it looked up. It looks like a double top, and we fell back in range. We are holding the 200 SMA. This is a very important number for me. If Amazon going to go back up for the Christmas holiday, this was the last week's weekly Fibonacci. Have to remove it. Usually I anchor them later on. Let's take a look at Facebook, which is going to be Meta now. Oops, FB. You can see Facebook fell back in the annual range of the charts. It looks like an inverted cup, and that's the handle, turned upside down. Let's take a look at Google. You can see that Google has looked above on a double top. You can see this is almost like a double top and eventually fell down. This is the weekly Fibonacci no longer valid. I have to take it out. So it's the prior week's range. Remember, I usually re-anchor my fibs on weekly basis from high to low from Sunday through Friday to see where they are in the relationship. Let's take a look at Netflix and NFLX. If things are gonna be okay and going back to work, is Netflix, because of that fear last week and things changing, is this mean gonna fall back in, or are we gonna find support in this area at the 161 116 SMA to create a cup and handle, or continue for a reversal back up? Let's take a look at Tesla. Tesla was a very big signal on Friday. It gave me a red flag, and I told you everybody, hey, watch out. If we lose the 1055 area, 1060, we may see the $1,000 where it fell down to 1,021 cents, I believe the low was, and eventually came back to the 61.8 to hold a little bit underneath the 117 area. We have to pay attention to it. If it ends up to be the 38 support, that would be the 50, and that would be the 61, vice versa. This is the monthly measured move on Tesla. Let's take a look at a couple of ETFs, and what I want to do is break them down a little bit more in details for everyone, so that way the reasons why I am talking about it. Let's take a look at the VIX, which I did. We'll start with the VIX, which I did on the slide. VIX. We can see that the VIX, remember I showed the weekly up there, that we have this little gap here. I marked it, and you can see it here in the charts. This is, the charts we looked above, pushed very high to 35 in order to close at $30. Does this mean we're going to lose to 28 and come back in range and get a Christmas rally? Pay attention to this VIX in order to give you clues if the market's going to be moving up or down. Let's take a look at XLK, which is the NASDAQ 100. This is part of the tech sector. You can see it's still in an uptrend. We are holding the 50 simple moving average. Let's take a look at the RSP, which is the value play in the large cap S&P equal weight. What we want to do is pay attention to this gap here and this move back down. It tried to look up, but it had an inside day for 2 days because it looked up and failed back in to fall all the way down to close at the 116 SMA. Pay attention to that equal weight in relationship to the SPX or the NASDAQ. Let's take a look at the FDN. And we can see that the exchange traded international index, if there is fear and things are starting to get concerning in the international markets such as Asia, Australia, Middle East, Europe, Africa, South America, and Canada, does this mean that the institutions are afraid of the COVID and getting shut down, or if from that variant, or we have a flush down in that market because it was range bound from August, September, October, November, and November, December, we just eventually fell back down in range after December 30th, and we had a sharp drop down due to that variant. And remember, we had the Fed policy. Let's take a look at the VTV. This is the Vanguard value. You can see that the value play is in range, came back in range since the May, June, July, August, September. We looked above in November, fell back in that range. Does this mean things are changing in the market or not? And I want to look at one other one, which is the TLT, as well as the, this is the TLT, which shows us that the bond market 20-year notes starting to spike up. Does this mean inflation is around and they're trying in the Federal Reserve Board to keep interest rate low, and people are turning to the bond market for safety and driving the par value higher? That's the TLT. If I look at the IEF or IEI, it's a similar, this is a shorter 7 to 10 year. We can see that we had a reversal. And if I look at the IEI, the shorter one, which is, the 3 to 7 year, still in that down range. Last but not least, I want to be able to give you something to pay attention to. Pay attention to the BANK, the bank overall market. You can see that drop down. This was last week's weekly Fibonacci. We have to take that out of the way, remove drawing. We fell down. We got this gap here. We consolidated this week. Does this mean that the banks are starting to get weaker? There's concerns in the markets, credit risk, as well as, corporate, going to shut down. Is it going to get them back up to be running on full capacity, and as well as the unemployment rate? We can take a look at the ADD, where most people don't look at it. Oops, dollar sign ADD. This is the advanced decline line. What we do is we try to use the advanced decline line not on a daily candle, but we put it down to a 15-minute time frame. And what I want everyone to understand, usually when the advanced decline line is trying to, if it is above the zero, coming back down and going back up, it gives you a reversal in the market. We can see that there was a big dump. It looked up, fell down, tried to look up, stay in range, and eventually on Friday it was up, trying to to fill the gap, couldn't do that, and eventually fell back down, and it tried to reverse at the bottom. This is how you use the ADD. And last but not least, let's go back to ES, which is the E-mini contract. You can see that the range from 2 days ago after the drop, this is the overnight action. We tried to look up, we went halfway back, couldn't hold in. We had an inside day. We tried to look up. Eventually, we fell back down. We stayed in the range of the lower distribution 3 days range in the S&P 500. Trade what the charts offer you. Don't be biased. And what I want to do is go to the monkey bars to show you two things to keep an eye on. Usually, the monkey bars will give us a reference if it is a P formation running up, or if it's a B formation running down. You get a B form, or you get a V-shaped form. Usually it's an inside, it's got distribution on top and bottom evenly. When it's got a P shape and it looks straight up, it gives you more of a bullish look. And if it's coming down and it creates value at the bottom, it gives you an overall area where it looks like inverted to this chart. This is the value area low, value area high. This is where the most contracts were. This is where most time spent. Usually in relationship to the POC, since it migrated lower, we can see that there was two distributions here in the time spent. We have one here, two here. This is very little, but I would look, if I look at the bottom and the top, and we draw a Fibonacci, since the time was spent a little bit higher, the expected move for Monday should be higher, but you don't know what things can happen in the overnight action as well as the weekend before Monday happens. Anything is possible due to the news. Pay attention to what the charts offer you. Try to use the profile to help you understand where the trend is in relationship to the time spent. And if you like this video, hit the thumbs up. Subscribe. We're here to help you. Have a good night. Enjoy your weekend. See you guys on Monday early on Discord.